Okay, good morning, everybody. Welcome to another Engineering the Markets. My name is Jared. It is August 23rd, 2022. Happy Tuesday to everyone joining us, and welcome to a market that is showing us a little bit of renewed volatility and therefore renewed risk. What we'll notice from yesterday's session, there was a gap down open after the weekend. The S&Ps did sell off further. And from our particular quantitative measurement of the SPX expected move, the market actually moved the entire weekly expected movement in one trading session. Now, some of this was the gap down itself, but it's notable to see that the market is mispricing volatility to a certain degree. And due to that, we're starting to see volatility readings pick back up. Short-term volatility especially has been somewhat exploding back to the upside, and that's providing additional pressure on both the S&Ps and potentially providing a risk if we are to lose this particular zone of the expected move. So wanted to note that we've already seen a breach on the Monday session of the expected move. It's also notable that we did something that was noted yesterday, which was start to fill up this particular breakaway gap. Market was able to break away from this area using CPI data as catalyst, and the market has so far come back in and filled up this entire area. This is notable on the SPY as well because we now have our overhead gap. And that's, of course, yesterday's gap down that has yet to be filled, along with filling up a previous structural gap, something akin to this entire range. Now, you want to be a little specific with these at times, but you also don't necessarily want to be exact when trading them intraday, because technically the gap open started whenever this candle opened, and that was an open of 418.78. It also the gap close, which is the previous session's close, that was actually slightly lower than this candle's high. So that particular price was 411.35. What it does is it kind of makes it look a little awkward inside of the gap itself. And what you'll see is that there was price activity both above and below these levels. That's, of course, our topping tail and bottoming tail, along with the actual price action leading to the close on August 9th. So these gap levels are precise simply because gaps are defined by the previous session or candle's close, and then the following session or candles open. Very specific description of where the gaps are. And what you'll notice is on the intraday, we didn't necessarily hit that exact price, but as I bring it to pre-market, I want y'all to see how precise this can be at times, and just to know about these levels, even if they haven't necessarily impacted the intraday trade. So as I mentioned, the 411.35, not sure why the low here is 411.36. So technically, even if you're using those very specific gap prices, that gap has been filled, albeit some of the price activity occurred during the pre-market or in the pre-market. So a little bit of a nuance there. Still relevant for yesterday's trade because, as you see, yesterday was facilitated by, one, a lot of selling, and two, a lot of loss of support. The market was trying to hold around 415 for most of the midday session. We had a notable breakdown of this area, and we started to put on more selling pressure into the close with really no strong reactionary bounces until we got to the relative lows of the session. So Very difficult trading session for long bias traders. You also don't necessarily see the same behavior of buy the dip during this time. There's only maybe a few opportunities to be long, with the rest of the core trade throughout the day being short biased. And that's very apparent both in the gap area, which doesn't technically offer a lot of support. It's also evident in the break of expected move. The S&P index, the ETF itself, does have an expected move similar to the SPX expected move. And yesterday we did see a breach. So that's that red line. This particular study just happens to draw it for any particular product. So lots of overall breaches in the market. We'll want to be careful here if the market is unable to reclaim, especially as just a long bias trader. You want to know that this behavior in the market can be facilitated by a lot of hedging in S&P products. It can also be facilitated by a lot of stopping out. Remember that bulls have been basically winning for the past couple of weeks. Lots of bulls have re-entered the market, basically allocated new positions, thinking that the market is overall going to continue to climb. The lower we go, obviously the worse that can be for those positions, putting more and more participants underwater, and obviously looking for deeper corrections if that were to occur. So what are some issues with the current market condition that we're in? What are some risks that are starting to show themselves? First things first, the dollar. We've seen dollar start to pull back as early as, I'll call it mid-July. And while this necessarily didn't mark the bottom of the S&P, you'll note that the bottom occurred a little bit earlier in the S&P. Some of the momentum in the market started around this time. So you could argue that when the dollar topped out, the S&P started to break out. And that's where we actually got strength in the rally, as opposed to just finding a relative low. So it can be wise of us to say that the dollar provides a little bit of clarity as to what the S&P could be doing, depending on where it's located and what sort of state it's in. As the dollar corrected, you'll note as well, there was another relative low printed on 8/11. Now, once again, the S&P did not top on 8/11. It topped a couple of days later. So on 8/11, the dollar was seeing its relative low being established, and yet the S&P continued to climb. What you'll notice, though, is some of the breakout structure, something like getting out of your retracement area, did coincide with the top of the S&P. So let's go ahead and draw that retracement and just identify when we're getting out. So about 8:15, that's a couple of sessions ago, probably about a week of trade ago. And then even breaking your first pivot, something like your first daily lower high into a lower low, that occurred on 8/16, about the same time that the S&P topped out so far. So it's notable to see that the dollar has a lot of structural similarities and differences relative to S&P movement, and it's a bit of a timing mechanism as well. If the dollar is in some sort of structural uptrend or downtrend, it can actually mark certain levels on the S&P just in the fact that they're coinciding at the same time. So it's very notable to see that correlation. What's interesting is, of course, the dollar is back at its all-time high, or sorry, its relative high. This is a high that we analyzed pretty in depth based on the fact that the dollar was breaking out a couple of months ago. That breakout had a certain amount of measured movement to its strength, and we pretty much achieved those levels. It's also notable that this is a monthly level for the dollar. Dollar has a kind of intact swing high here after a correction. So something like an uptrend going into a sell swing and then bouncing higher, that high was already set back in time. So we kind of knew that this area was going to be important on the most recent pullback. What's interesting here is not only the strength that we've seen short term, but we're already back at these levels. So some ideas for the future trade here is that the dollar could easily top out. We could see maybe a small breach or something akin to just a upside test, and the dollar could actually see more downside in the future, but not until that test really occurs. We could also see just a very clear double top. How would that look? Well, we'd need to first move away from this price, and we'd also need to reclaim weakness, because in this case, getting to a double top would have to occur back at these levels. We'd have to break down and give back everything we've seen over the past 2 weeks. So that's a little bit of a harder case at this point, even though we're at the right level. The third case, which is more just following the direction of the trend, is that we break out. And what this does is, once again, if the dollar is strong, the argument to be bullish the S&P starts to fade a bit. Because if we are seeing that heavy correlation between relative tops and bottoms, the dollar overall breaking out will provide pressure. And that'll be ultimately a bad risk signal to go long the S&P. So we want to be cautious here for this particular reason. We have good correlation coefficients and notable inflection points for when the dollar has either tested relative highs, had relative lows, and then even things like structural breakouts. Those areas have been important for S&P trade, and therefore we should pay attention. So that's item number one. Item number two, interest rates. They have been on the rise once again. We're seeing that the 10-year actually breached above 3% on yesterday's session. Now, we've seen this before. This has been previous readings that we've had in a recent trade, and we're still looking at a market with a little bit of a inverse yield curve. So none of those changes have really taken place behind the scenes. What we're really seeing is the 10-year is starting to rise again, along with many other interest rate maturities. Let me go ahead and get this to our current month so we can see where we are. But we don't want to forget that we're still in a slightly inverted yield curve at this point in time. So our 2-year, kind of the one that everyone focuses on, still at about 3.32. You compare that to our 10-year rising at this point, but still playing catch up, simply because the 2-year has also been rising very quickly. So rates overall have been on the rise. Doesn't necessarily mean that we've seen, back to a more normal curve or even a flat curve. But what this is doing short term is also providing more pressure towards tech, towards growth, towards the names that ultimately are very sensitive to rate changes. And while the overall macro picture here has not really changed, the short-term behavior is that this is going to be a little bit of a negative for our tech sector. And as we all know, tech is very much a driver of the S&P, both bullish and bearish, and it's certainly a driver for the NASDAQ. So you can look at the TNX here and then pull up something like your tech sector. So XLK is a quick example. Pull up something like the structures here, and you'll notice that the most recent rally in rates started somewhere down here. But the tech sector once again corrected, or started to correct, once it hit the 200. Very similar to the S&P. Notable that most of these ETFs and sectors are in the same location at the same time. but it also means that we didn't really see the stronger selling until the last couple of days. That corresponds very well with the sharp rise in interest rates over the past couple of days. So it's one of those things where this really wasn't a problem until it was. And that's the issue with the current market condition right now, is we're seeing a lot of risk off behavior come back into the market, noted by some of these high correlation comparisons, either inverse or positively correlated. So rising rates, you often want to be thinking a little bit of pressure in your tech sector, and it's also going to affect things like growth. This can be something as simple as your cyclicals or some of your actual growth names, of which, there's other ETFs that you could look at. I don't really have a good one at this point in time. So you could argue that ARK is probably a good reading on that. So ARK is seeing that downside pressure here, and it's notable because it's very obvious to identify the change. Things were looking fine on this trend. Things were going up and down, up and down. We were getting out of our resistance point. We're breaking out of range, not with a lot of energy, but we're starting to recover. And then all of a sudden, you can just see and feel the selling pressure take hold. This right here, this strong gap up in rates over the past couple sessions, is notable as a moment in time when this is all occurring. So that's item number 2. As we go down the list, this is just it's painting a picture as to what to expect. This one, once again, it's a little bit newer to our analysis, but overall what I've proposed here is that the market can be identified as risk on or risk off, not only by the sectors that are performing, but also by its risk tolerance. And one way to gauge risk tolerance is, one, the overall trend of the high yield corporate debt, ticker symbol HYG or J&K. They both are very similar in their structures. And you also want to somewhat compare this to basically risk-free rates. So a marketplace that is using this as a position compared to something like a 2, 5, 10-year treasury note, bond, or bill, those things are comparative. And if the market is more risk assertive, they will put more of their allocation into something like higher yield or higher risk debt. And therefore, we should see these products go up. Therefore, the rates go down. Right now, the opposite effect is occurring. At least in the short term, these are correcting. They're coming back in, and they're actually seeing similar levels to when they broke out. So, we noted that this breakout was relevant during the time. We had HYG breaking out. The levels are very clear here, and that breakout had potential. If you just trust in these ranges doubling, then you'll note that if I draw a trend line or just a horizontal line, not only did we double this range, we went a little bit higher. Most of the time when I talk about range expansion, I try and keep it simple. Ranges have targets. Ranges that double have a doubling target. So whatever the low and the high of the range is, you want to note what price represents the top side and the bottom side, depending on which way the range goes. Can it go higher? Of course. But in order to be countering that move, you often want to wait for that first target to be met. And afterwards, you can start looking for things like losing trends. Something as simple as breaking a trend line, even though this is a very kind of a shorter term trend line. So anyway, what's noticeable here is that the market's risk tolerance and risk appetite has gone down. We're seeing very strong reduction in HYG, and the selling is starting to perpetuate back to the downside. It's also notable the speed here. Um, we often talk about that slow grind to the upside, and then the fact that the markets can easily pull in very quickly. In this case, there's a lot of gaps in this particular product, not necessarily notable. This product typically does have gaps, but um, it's notable to see how quickly this correction is occurring. So this is classic risk-off behavior during this period. This period here can be noted as a market more risk-off, more keen to be somewhat bearish, and not necessarily putting allocation into the sectors that would hold the S&P strong. So that's notable for tech, which corrected. We talked about that one. It's notable for financials. They're starting to pull back in. They had a great rally off of their weekly. This was that buying opportunity. This was a bit of a longer term opportunity here. Most corrections in financials have landed here. That move is probably starting to fade a bit. And this downside that we're experiencing, we need to take note of how far it can go. Not only can it give back the entire move, but we also want to be thinking about, okay, if I'm a buyer, where would I want to be long? What sort of areas in the market offer structural support or some sort of level-based support? And those are notes that you want to have for any sort of sector analysis that you're doing. Excuse me. Sinuses are coming back up. So XLF, U versus U, this is financials. Yeah. So this is your financial spider allocation. And these are going to be all your financial stocks that are in the S&P, market cap weighted. So, so, to kind of summarize here, we're in a market that, at least in the short term, is going through its correction. We had a great rally throughout July and into August. Looks like we've topped out around the 200. That was notable, and it was also tradable. If the market does want to start to pick back up bullish again, the key here is not to step in too early. Allow this market to actually settle back down into a more stable area of support. Allow this to reestablish itself bullish, and allow some of those risk factors to actually showcase that the market wants to go higher. The dollar would be a great one to see top out at that particular monthly level. Rates either stabilizing or not necessarily exploding back to the upside would be another positive for our tech sector. And then finally, we need to see the market go back into risk-on behavior. If corporate debt is coming back off and not necessarily seeing any more momentum, that unfortunately is a more classic representation of risk-off behavior. And it's one of those things that you'll have to be aware of when trading inside the S&P. So for all of those characteristics and some of our leading moves that we've had, the notes here are more about expectation. Downside expectation, which can continue for quite a while, along with the fact that we're not really seeing any bullish setups yet. You'll note that IWM broke the 20, so did the SPY. The NASDAQ is a little bit better, or sorry, not the NASDAQ, financials. Sorry, I was thinking the wrong ETF, but most of our ETFs have broken the 20. They've closed beneath it. Does it mean that they can't recover? Absolutely not. But we want to be careful trusting the lows of yesterday as any sort of risk level at this point in time. Can't even really step into a bullish setup yet until we at least get a moment in time where the market has stopped selling. And that behavior that we discussed, where the market's a bit more risk off right now, and we've currently just filled up this gap, we want to be aware of maybe some short-term bounces leading into further downside, therefore possibly posturing around short-term plays into a more medium-term continued correction. So long as those risk factors remain, I think the market's going to struggle, if not give back more of this overall price. And for that, we want to be looking a little bit deeper, possibly possibly looking at something like volume profile, allowing the market to get a little oversold and using that as a good risk to reward back into our value zones. So what that can look like is, for volume profile, something like a 30-day is a really good time frame to assess, because yesterday we pulled into value. Ideally, if this area holds, it's the fairest price that the S&P has seen in quite a while. You can actually pull this back about 90 days, same relative VPOC. You can pull this about 180 days. Our value sits a bit higher, but this is a very high value node in the S&P. Just overall, this is a very fair price based on volume profile. So if that's okay with you and that kind of fits your risk, this is basically where most of the participation on average has occurred. This is where a lot of transactional value is, and it's where markets tend to transact. It's this entire zone here and these high value ranges that the market has established. Doesn't necessarily mean the market's going to go up from here. It's just fair at this point. We got overextended. We hit resistance. We pulled back into fair prices. If you want edge in this market, you often want to be looking for things to get oversold and overbought. You play them towards fair prices, and then the ideal scenario is that it goes further before testing your entry. I think that's also going to be true for this correction. Allow the market to maybe surprise and possibly astound how far down we can pull, and maybe in the short term play these bounces, but don't necessarily trust them, not until the risk in the market starts to really come off. So for that, my name is Jared. Stay tuned for pre-market prep. Trade safe as always, and we'll talk more about this tomorrow. We'll go a little bit more into strategy tomorrow and some option techniques to trade this type of market, one that tends to have a lot of good inflection back to these zones. So stay tuned and we'll talk more then.
All right. Good morning, everyone. Welcome to PreMarket Prep. I hope you're having an amazing morning. Hope you had a great day yesterday. Good morning, Norm. How you doing today?
Hey, good morning, buddy. I'm doing all right. I'm a little bit behind. I apologize, at least on the technology front, not the rest of it, but I'm good. How are you?
Good, man. Good. Can't complain. Guys, let's give Jared a big thumbs up for taking us through the engineering the markets every Monday through Thursday there at 8 a.m. So let's slam that thumbs up over on YouTube. It does help us out quite a bit. So All right, guys, let's get to it. I'm gonna hop over to what we had yesterday. Let's go right over here. Yesterday was a funky day, man. At least on my watch list. It was not pretty. Here's AMC. We'll start there. Let's look at our 5 minute. This one got, I think it got going early on, right? And then it just kind of stalled. Yeah, so it got going early on. Nice, beautiful engulfing pattern here, which again is AMC, right? So difficult to trust patterns on this ticker. It's so aggressive, so wild. But this actually turned out pretty nice. Nice engulfing there for the break, and then you can see how well that popped up. It did a halt here. I remember that. Andrew was in for this one. He got a nice early entry. Actually, this made his day here on this breakout. And then you got the initial second halt, and then after the second halt is when things get funky. We always tell people be very cautious after you have the second halt. And then it halted here, and then you can see gapped up. Then from there, it just sold off. There was no strength left, no volatility left in this thing. And it just sold off. There was nothing else to look at here. And I don't recall if we had shares for shorts. I do not believe we did. The next one we had was Plug. Plug also took off a little bit, but it was not a clean takeoff, guys. I mean, this thing, it for me personally didn't trade very clean. I got I got stopped out a couple of times on the way up here. But again, it was not, it was messy. It was messy for me. And you can see here actually in the intraday, the entire day just couldn't really get going anywhere. Even though the SPY was selling off, Plug, which is kind of hanging out here, not doing much. And many tickers did just that after the initial run in the morning. Here's A firm ran up pretty nice here. I didn't really look at the action here. It looks clean, so, based on look at the charts now after the fact. I don't know how the actual price action was. Again, I'm not a big fan of A firm, but there was not a whole lot for me to watch at least. Then the drop there comes back down to where it opened up, and it kind of goes sideways for a little bit there. Oxy, how about Oxy? Oxy was just insane. It started taking off. I want to say 11 a.m. So 11 a.m. you start getting this rally here on Oxy, and man, it just shot up pretty nice. Kind of a double bottom here. You have to wait a little bit because after this pop here, you have to wait for it to come all the way back down. But if not a double bottom, you do build a nice base here of support around 67, 60. And then from there, you can see testing the VWAP one more time. And then you had this beautiful takeoff here for Oxy. So that traded well into the afternoon hours. For there, a little bit of sideways action and then not much after that. CCL was brutal. I mean, I was hoping this thing will do something. And we knew it was a somewhat of a hit or miss on this one. And you can see here, it wasn't great. Apple, same thing, guys. Rough start. Again, even though the SPY sold off, Apple was not having it at first. Eventually gave in later in the afternoon, but at first it was not really trying to sell off here with the rest of the market. And then we had some other parcels. We had Ape that opened up yesterday as well, IPO'd. Didn't, got going here, got halted like 4 times, I believe, on the way up. Eventually, I guess people got tired of trading and just being stuck in a halt, and it's just kind of slowed down here in the volume. Didn't do much the rest of the day, selling back down close to their IPO price there. And that's it, guys. That's all we really had. DKG was okay, but again, not the cleanest day though. I thought it would be nicer with the list we had, but it didn't quite turn out that way. On our gappers list this morning, guys, we got quite a bit. We have Twitter down at 3.7. Can't wait to look at that. And some other names on here down quite a bit. But on the gap up list, we have a few tickers that were hanging out on the downside just a day ago. Now swinging back the other way. We'll see what's going on there, what we can pull off this list. Looking at the names already, I can tell that it's not going to be a great list. So some of these tickers that look very weird. But we'll see. We'll see what we can get out of these. Norm, latest and greatest for today in the overall market.
Yeah, I mean, we just had a huge down day yesterday, so we'll see what happens. We've had, I mean, a pretty smooth ride up the last couple of months, and people, I think, realized that they were getting a little too optimistic up there in that range. So, yeah, we'll see how the market reacts to what took place yesterday. The Qs and SPY were up a little bit throughout the morning, but Qs, for instance, which was the biggest loser yesterday, down like 2.5%. Has essentially come back to flat. So let's do it. Then at 9:45, we've got manufacturing and services PMI numbers, and then new home sales at 10.
All right, excellent. Thank you, Norm, for that. Question in chat. It's a good question here, so I'm going to answer it now. Usually we'll wait a little bit, but the question is what percent of your account you trade on one position? And someone responded here 2% based on on the BBT book. And again, you got to be careful with that, with the percentage. At first, when you first start out, again, 2% for an experienced trader, and I don't think that's the actual number of the position. I think that's probably like the risk. But as
That's
an
the risk
experienced,
that,
yeah,
yeah.
it's the risk, I believe, not the position.
And it's
Because
not, you wouldn't want to risk really, I don't know, 2% per trade
no,
either
no,
necessarily. That's like per
yeah,
like day. A lot of people would risk that max in a day. So
right, right. So you got to be careful. The most important thing when you're starting out is, trade small. Forget about percentages, because if you look
yeah, forget
online,
about all that stuff.
everybody's going to tell you, oh, day trading, you risk 1%. Well, guess what? If you have a $40,000 account, which is not, which is not far fetched for a lot of traders, day traders, that's $400. So you're going to risk $400 per trade. You're risking too much starting out. You should focus on risking, $10,
Yeah.
$20. Build that system, and then you can slowly scale it. Like Andrew says, if you can make, $30 a day, $50 a day, scaling it is not a problem, but you got to have a good foundation of a system that you have proven that
as
works.
long as
So
you can as long as you can control your emotions, it's not a problem.
I
That's where the problem
agree.
goes in
Yeah.
with scaling.
Yeah, yeah, because you get to a point, and Nora, you're probably there now, where we're stuck at an area where, okay, we're very comfortable risking this amount. It's a good
Yeah.
amount, but
Yeah.
our jobs now is to try to make that more, try to risk a little bit more to make more. And I realized that when you get to a certain point, you start making mistakes. You start getting a little sweaty, which, it's like, okay, your hands start getting sweaty. You start getting a little nervous. That's when you know, okay, I got to dial it back a little bit. I'm risking too much. So just to answer you guys, because it's a very important question. Thank you for asking it. Forget about percentages at first. Worry about that later down the line. All right. With that said, guys, let's take a look at our gappers list. Let's kind of dissect this and see what we got going on. I'm going to Control A, Control X to get rid of this here, and then we're going to hop over into our gap up list. This morning we have AERI, which looks like a buyout, so not much to see
Yeah.
here. Head on down to Apron, Apron Blue, yeah, Blue Apron. These guys are up 17%, and they had a good day yesterday as well. The last couple of days they've been rallying. Norm, what's the news on this? And I think
It's
you
all
mentioned it.
meme.
It's all
It's
meme on
all
this
meme
one.
stuff. Yeah.
All right, all right. So one's still here trying to get
Yeah,
something going.
take a look at the short float, 56%. It's listed as 40. That's on TI. It's listed as 43 on FinViz, but nevertheless, it's quite elevated, and the apes are going after it.
Yeah, yeah. I thought the apes were going to take ape and for a better ride, but again, we'll see what it does today.
It was nuts,
Or
man. That thing when it
yeah,
opened for like 3 seconds, halt.
it couldn't
Open 3
trade.
seconds, halt. Yeah, it was
Yep.
untradeable.
It was really untradeable, and I think that probably kind of scare people away from trading, or not scare them, but just kind of defeat the purpose of being stuck on a halt. So we'll see what it does in the next couple of days. I think this will be in play as it continues to move here. Already got some good volume, 1.6 million. But Blue Apron, guys, 7 million shares flow. It is in play. It's got some activity right now, 2.3 million shares traded. Just understand that this is a meme stock at the moment. And you know how those can trade. They can be very aggressive. So put it on here. So on our risky pile, APRN. Yeah, APRN. So we'll leave that right on there. Next, we have Wet G. What is Wet G? This thing is up 13%. 200,000 shares traded. Looks horrible.
It's Chinese. They announced some strategic partnership with some travel agent company or something of that. Not a huge fan.
We trade. Yeah, I don't know about this guy. So it looks ugly right now. Let's move on down to Indo this morning, 3.7. Up 11.3 at the moment, 804. We've seen this before, actually. We're making fun of Indo and 420, there's other good stuff. But this is sitting in the American Stock Exchange. And I don't like stocks that sit here, tickers for specific companies. Also looks foreign. Indonesian energy. Yeah, that's just
It's
low
oil and
float.
gas. It was in play. I'm not. Yeah, it's
Yeah, I'm
low float,
not a
as
fan
you
of
mentioned.
this one. Let's move down to Pan W. So Pan W this morning, Palo Alto. We've seen this before. I think you might have mentioned it.
Yeah.
They're up 9%, but they're not looking pretty at all. I can only imagine.
Yeah, this one's very, very difficult to trade intraday. It's really kind of like I just don't even think about it
Yeah,
unless there's some extraordinary circumstance. They did get an analyst call that they expect their market cap to double in the next several years. It's a cybersecurity firm. They had earnings yesterday after the close. So, but back to what I started this whole conversation with, it's very difficult.
Yeah, it looks tough to trade. The volume you're getting here looks under 3 million per day easily. So
Yeah, it
based on
doesn't trade a
just
whole lot.
looking at this, so
And it's, I
very
mean,
careful.
100,000 traded this morning. Well, that
Yeah,
still hits the scanner. The last 2.5 years have shown that that 100,000 share mark is very low.
yeah, I agree. So, moving on down to AMC. Again, had a very active day yesterday. Today, there are gapping up 3.3. There might be some movement here, guys. We got 1.4 million shares traded, so we are trading higher volume than usual on AMC. I'm going to add it here as a possible. I don't know if they're going to be in play today. They had a nice pop yesterday. But then after that, they just kind of really went dead. BBBY, I think the fun is over here. Let's see what this did yesterday. I did not even watch it. I actually had a nice pop early on, so it did give you a nice little breakout here. This sell back down, but again, I think that's kind of the action you're going to see here. Eventually, this thing will die down. You can see here the volume on the daily continues to drop off, and that's just going to provide some not so
Mhm.
great trading. So I'm not a fan of it. I don't think it's worth watching today. So we'll skip on over to Becky's on here, which is not doing a whole lot, up 3.4, but the volume and pre-market are not great. So we'll skip on this for now. I like the daily, and I know some of you guys.
Earnings this morning.
Oh, all right. Did it report already?
Yep.
Oh, okay. Okay. So maybe things can pick up at the market open. I like the daily though. I do like this daily for a possible breakout if it can get the volume. We'll put it here next to AMC just in case we can get something going on Becky. All right, we'll stop here, guys. Let's see anything exciting here. Mara and no volume this morning. We need a lot more than 151,000 for Mara to be exciting. PDD is another one that we see quite a bit. Has a gap of 2.5, but the pre-market is pretty crappy at the moment. And KLA, no good, no volume. Dix, any news on Dix? They're popping up
Yeah, they had
2.3.
earnings this morning.
Dix could be interesting. We'll put this on here. Dix could
Okay.
be interesting. This gap is listed. I gotta tell you, the names on here are interesting on their own. So you got Indo, you got Wet G, you got Dix. I mean, what is going on with this thing? Jeez, Locker. Okay, let's go. Here it is. JD this morning up 2.1, 553,000. Yeah, it's active. I don't like JD because I don't trade it well. But I'm gonna put it on
They had
here.
earnings this morning, by the way.
Earnings this morning. Okay, perfect. So we'll put them on here again. I'm not a big fan of them, but we'll see. Macy's earnings. They're
Yep.
got a little pop here. It's the only
Are they
time we
on the
see them
list?
on our list, right?
They're
Um,
not on my list.
on the gap up.
No.
Hmm. Yeah, it's popped up. Just barely made it on mine. Maybe yours is coming up. Just made it in here.
Considering
Um,
they're only up 1.8%, I don't think they will.
why would they? Yeah, maybe it's gonna drop off
It
because they're
must
back
it
down.
must
Yeah,
have yeah, it must
yeah.
have popped up for a second. This was going to be one of the ones I called out. I if there's not much else, maybe they had
Yeah,
earnings.
yeah.
So
Possible for now. Hopefully that can look a little bit better. They have the volume up 2%. Again, it's a hit or miss with this. It's kind of like Coles. They can be great, but they can be horrible at the same time. We'll see which way they're gonna move today. All right, let's head here to our gap down list. GCT, 360,000. I think recent IPO. Yes, we saw this a couple of
yeah,
days ago. Open up, down 15% today. Again, it's just I don't know. I try to avoid these recent IPOs. They just have no history. They haven't really set up their trading DNA. I want to say the way they're going
it's
to trade,
Chinese too.
and it's Chinese. Yeah, it's going to be so unpredictable. I'd rather keep something else on my list. Zoom this morning. Wow, they're taking a
The float on GCT is
yeah.
very, very, very small as well.
It's crazy. It's 360 here. Who knows what it really is? I
That's
mean,
what Finviz says too. So
yeah, careful with that stuff, guys. Recent IPO, not a whole lot of history on here. Very, very careful. All right, Zoom, down 12%. Norm, earnings last night looks like based on this
yeah,
chart.
yeah, they
And
absolutely had earnings. They've got some issues. They're getting downgrades this morning as well. They just, I mean, they had their day. They
yeah,
had their
yeah,
years.
their
Let's
years
put
and
it that
months,
way.
and
And
yeah,
it's not that
yeah,
people aren't still using them, but they're not growing. They're growing users at a pretty slow pace.
right. And I see a lot of people moving over to, and I mean, we have for our meetings Google Meets. I mean, it's free, it works well. The quality is good. So I don't know how, when you got free services for this one. I know businesses tend to use this a lot more, business accounts. We'll see. I don't know how much they can do here. So Zoom down 12%, guys. 375,000. Definitely in play today. We'll see if this volume continues to pick up. This is a good gap down in the daily. I like, because if you look at May, you have a nice area coming up of support here. Are we going to hold this? If we drop below this can be a whole lot of fun. We do have shares for sure. So Zoom on the list this morning. First one on our main list so far. Here's XPEF. They are down 4%, losing some levels of support here in the last couple of days. As you can see, a couple of red days back to back. Man, they've been just getting crushed since end of June.
Yeah, they had earnings last night, I believe, or this
Yeah.
morning, and this morning overnight, since it's Chinese.
Yeah.
But their guidance is garbage, dude.
Mm.
So they're
This could be a good one today. This could be a good one. So let's add XBEV on here. We haven't traded XBEV I haven't in a very long time. Or either Neo. Is Neo moving on sympathy as well? I would suspect doing something. Down 1%, not really a whole lot of volume. Their daily looks a lot better for a drop here if we can lose this. But definitely XBEV worth taking a look at here. We just need a better pre-market, not better pre-market. We need volume to come in, hopefully around the market open. Here's Twitter. Twitter right now, we got some good action on Twitter, Norm. Is any specific news? Twitter sat this on here.
Twitter, I think Twitter's just. I know Elon Musk subpoenaed Jack Dorsey. That's about all. I think it's just Musk turbulence.
There we go. Well, that's creating some action here for us. We are down 3.3, 1.6 million shares traded. Worth keeping this on here for now. Yeah, I like what I'm seeing there. We'll see where this ends up going. All right, that's our list, guys. Again, not a BBBY coming up here. What's going on? Oh, no, we saw this already. Okay, yeah, it's not doing anything. It's not doing a whole lot. I want to see what this would look like, this short flow, this short interest when it updates. I want to see what that's going to look like. Should be a lot smaller than that. All right, guys, that's what we have. Norm, anything you like on your end this morning? I know you're running a little bit behind, but
I was gonna mention Macy's, but we
Yeah.
already talked about that, and
Yeah.
even that is kind of a weak. That's
For now.
secondary or tertiary for me because I know it's not really how I like to trade, but
Yeah. Let's take a look at what our chat room has today. We'll start with our members, and we'll look at YouTube as well. I see a lot of you guys throwing out Zoom. Francis, Chris, we looked at Zoom
looked
already.
at it.
Definitely in play, down quite a bit here. Matthias, we looked at Neo. Neo's not doing a whole lot compared to XPEF, so I'd rather look at XPEF today. And Neo hasn't been great. JD, we have on the secondary. So a lot of the stuff you guys are throwing out, we have on here. AMC on a secondary for now. But this, based on what we have on our list, this can actually move up because we don't have a lot of stuff that looks great. And AMC does have some activity here. And it can give you some really good scalping opportunities. Again, you just got to be quick and you got to be disciplined on this one. You do not want to be making risk management mistakes on AMC. You do not want to be taking a big size on AMC because it will make you pay big time. So careful on that if you're caught on the wrong side of things. Apple, let's take a look there. Cam, Apple looks good today. Yeah, you're pretty much flat right now, but if the market is going to move, Apple should move. It didn't move too much with it yesterday. But Apple will be a good one to keep an eye on based on what we have today. Jeff P looking at AMD and the Plug. Plug had one initial move yesterday, then didn't do a whole lot. Not meaning that's going to be the way it ends today, but their daily does look interesting. You had a nice little run here, kind of a pullback to an area where you have some support and resistance. Maybe we can get going here, back towards the highs, right? They've seen some really good days, so maybe right now pre-market action is extremely light. Good possible for the moment. We'll come back to if it gets going. Qs and spies, definitely want to keep an eye on that. AMC, nice uptrend. AMC, yeah, we have AMC here. Yeah, it's starting to bounce here a little bit. We'll see. I like the volume this morning. It's got some good volume today. Over on YouTube, what do we have? Oxy again. Let's take a look at Oxy. Oxy pre-market is probably going to look pretty quiet, as it usually does. But their daily does look interesting. Yeah, I agree. We can watch Oxy. Had a nice run up in the mid-morning yesterday. INTC, unless they have news, guys, they might have something here.
Well, they had news of the chip plant, I believe, in Arizona, a $30 billion investment. But INTC trades so poorly.
I know, man.
Unless they really, really have something good going on.
Yeah, it's got to be major news. They had a big down day yesterday. Could be interesting to
Everything
see.
did.
Well, yeah. Interesting to see how that news is going to play out. But again, volume right now is pretty light, so the news might not be as crazy. But again, INT does not move as much. All right, last one here. Bob is not doing much. It's flat, and you guys know we like Bob to gap up or down, so we can play it for a gap fill, whatever direction it wants to. But when it's flat like this, it's difficult to trade. You've been seeing it the last couple of days. When it opens flat, it doesn't move a whole lot. So we'll keep it off the list for now. That could change, obviously. I skipped you. Sorry about that. Let's look at Shell, and then we'll call it a list here. Yeah, no, this is what is this Dutch Royal Dutch Shell. I don't even know what this is, but
oil company. Shell.
Yeah.
Shell oil.
Oh yeah, Shell.
No.
Yeah. No. Across the board here. All right, guys, let's take a look at our webinars.
It doesn't. And I'm not trying to be. We're not trying to be mean, but it doesn't have the volume. It's
yeah.
You know, it doesn't trade well considering.
Yeah, it's messy.
It's a UK company. Those are some of the worst trading companies if you look at non-US stuff. So just
and look at the daily on this thing, just the gaps that you get. It just doesn't move well.
Yeah, that's the typical. We haven't talked about it in a long time, but that's the typical movement you get of a company that's not US, and those UK ones do it more than anything.
Yeah. Got a
currency issue.
Andrew F, we'll look at yours last. Pan W. We looked at Pan W actually.
We did.
Yeah, we'll come back to it after announcements. Let's get over to our webinars, guys. You can come to our webinars, barebulltraders.com, click webinars, and this will take you down over here to what we have going on for the next 2 weeks.
All right, guys. Every Monday night, 8 p.m. Eastern, Carlos doing onboarding and technology. Join him no matter your membership category, even if you're on a trial membership. Go check that out. Tuesday strategy. Tonight you've got Andrew. He's going to talk about the art of trade management, how he manages risk in his trade, partialing, and everything else. So that should be interesting. Then Mike next week will be talking about how to find the right strategy for you. What kind of trades or strategy might fit your personality and your abilities best. Wednesday, psychology. Mike, once again, creating a psychology journal. That's at 8 p.m. And then the following week, overcoming fear. Thursday's mentorship, 11 a.m. with John, 4 p.m. with Ed, 8 p.m. with Thor. Don't forget about StockTradingSimulator.com, our free web-based replay simulator. You can go to StockTradingSimulator.com and practice your trading for free, 24 hours a day, 7 days a week. Then that trial membership I mentioned earlier, if you'd like to give Bear Bull Traders a try, go to the home page, scroll down about halfway down, and you will find the membership chart where you can click that intro membership, join now. Use the promo code PreMarket24 for a discount. It is a one-time payment. It does not recur. It cancels after 7 calendar days, which equals 5 trading days, unless there's a market holiday. And if you'd like to become an elite member and get access to all of the webinars I just described, the mentorship stuff, and recordings of all those from past ones, use the promo code READ50 to get half off the elite annual membership and a free one-on-one coaching session with Dr. Kenneth Reed.
Thank you very much, Norm. When does a short...
Yeah, sweaty fingers trades. When I was going on my rant about stocks in the UK, he chimed in that he's from there and he agrees U.S. stocks are better. Yes, it's nothing personal.
Yeah.
It's not a personal 100%. Thing. It's a currency. It has to do with currency and exchange rates and everything else. A lot of it is, at least. So they typically trade lower volume as well.
Yeah. So do not send Norm any hate mail, please. I remember someone sent you a hate mail based on Chinese stocks, and it's like, guys, come on. That is so funny. All right, guys, we are all set here. A question we had here, when does stuff usually pick up? And Norm did answer this, and yes, it's going to pick up end of September.
After this holiday we have coming up a week from Monday, we should get a little bit better in September. But I mean, it starts to pick up much more heavily toward the end of September. It's kind of a great time to get started if you haven't traded and you're interested in trying it. If you haven't tried it and you're interested in doing it, it's a good time to come in and kind of mess around with sim, get a feel for it, because the market's usually a little dead right now.
Yeah.
And then you have a better idea of what you're doing by the time volume picks up in the fall. Now, that having been said, with the volatility that we have in the market right now, maybe it comes back and it's better trading a little bit earlier. Who knows?
Yeah, I agree 100%. All right, guys. Someone mentioned Pan W earlier. That's why I have it up here again. It just doesn't look very great. It looks very choppy. Be careful with this one here.
It tends to have a really nasty spread. That having been said, it's a $560 ticker, so it's going to have a larger spread, but it can shop around a good amount.
Yeah, I mean, this one here is going from 561 is 48 all the way down to 560.12. So you got a dollar.
That's
right
not
there.
that's not that much for. I mean, percentage wise for $560 stock, that's not too bad. But the problem is, look at the level 2. Look at how many blank things in there and how thinly it's traded, how few shares are actually available. Those zeros, that could be somebody with one share.
Right.
So
look at that. You could get all the way down to 561.92.
Yeah.
I mean, that's a dollar extra. Yeah. Just be very careful. It's going to move funky.
So just be careful.
We know that's going to get better at the market open, but just be careful. All right, guys, let's do some levels here. We got XBEF, we got Zoom, we got Twitter, we got AMC, we got Apple, and we got Oxy this morning. Not a blockbuster list by any means, but things will get better hopefully, and we can get some opportunities here. Key thing is that if you find yourself getting stopped out a couple of times and you're not finding your edge, just take a break. Sit back a little bit, look at the bigger picture, and wait for different setups to show up. XBEV this morning, we are down 5%. I do like this one today. 1950 is the low of the pre-market towards the top. The high of the pre-market is slightly above the previous day close and the lows for the last 2 trading days right on here. So this area is going to be more important, especially that previous day close. What happened there? Okay, I'm back. For some reason I lost my my charts on my end, but yeah, so this is going to be more important. You can still mark your high of the pre-market is going to be a 21.25, which is all the way up here. But then outside of that, you got plenty of support of resistance for the moment up there. That was prior support. Let's look a little bit higher above this on the daily. You do have more highs and lows for the last 2 trading days, so I think you're pretty good towards the top. I don't think you need to add anything, and you're down quite a bit, 5%. So I don't think you need to really go up any higher than this unless you start breaking through some of these levels, which at the moment is not looking like it's going to do that. Let's head over to the left, and we can see here May, June timeframe. We got a little bit of support, nice double bottom, which is where our price action has been this morning, down to 1950, hanging out around 20 at the moment. And if we were to lose 1950, we do have a nice area here of 1840. Where we tested that low and then came back to that 1950 right in here. So that looks pretty good. Slightly above that's a couple of days. These 3 right on here, opening, closing, might be 2050 at 2037. Again, not a major level like this one is here, because obviously the double bottom is coming off this 1950. But that might be worth putting on there. Just have a midpoint between the low of the pre-market now, 1950, and the high 21.25, right? It's kind of midpoint there. You can see, I won't put too much weight on this pre-market action, but you did get a bounce off of this, right? You can see the action kind of flirting around with that 2039 there in the pre-market. So if we were to lose this 1850, which will be tough, because if you look at this, we have not been down here in quite some time. Actually, the few times that we came here, this 1840 was that area where we had a nice bounce, right? So this stock likes to stay above that 1840. So breaking down below that or getting to that is not going to be an easy task for XPF today, depending how weak they're going to be. So I don't see anything here in the last 52 weeks. So we'll keep it as that 1840 for now. If we break down from that, this should be very, very interesting, but it'll be tough if we even get there. Let's look at Zoom this morning. Zoom right now, it is, again, big drop yesterday, down 12.2. And this morning they're feeling the heat a little bit. So low of the pre-market, we have 85.25. So I'm going to slam a level there. Then above that, we do have, what is this? 98. So that's good there. And then if we go to the left a little bit here, To the left around May, in May we had a lot of action around these areas. Not the cleanest daily. And Zoom again, I have it on here because they have such a big drop, but they're not the best trader. But I gotta say, today their pre-market is looking better than I've seen it in a very, very long time. So the 85.64, good area of support. A lot of days opening, closing right around here. So that's going to be good. And then we did drop down to 79. We tested that for a bit before we shot back up to above this 85, what's 85.64. So good stuff there. Let's take a look towards the top. I think you're set, right? You have highs and lows for the last two trading days. Yeah, so you're pretty much set here towards the top. But right now, looking rather weak in the pre-market as it continues to lose this 85.64. Your new pre-market low is actually right here, 85.26. We'll mark that down. Let's see if that's going to hold there. Going to retest that at the moment. All right, let's look at Twitter, guys. Twitter, very active, 1.8 million shares traded. Nice range today, going from 43 all the way down to 40.65. So you got some good movement as far as a distance dollar wise on this stock, right? So you got a almost a $2.5 drop there, which is very, very nice. So towards the bottom, if we were to lose this, which is a great area of support, that can be support again now. You can see that right on there. Below that, you do have another the big level is going to be this one, 39. 39, you got a lot of support happening there. You got a little bit of some action between these two levels. There's a slight lower level here at 39.87 as well. And this is where you're really getting that ping pong action before we had the breakout over to 40.65. So you do want to have all three of these levels on your charts. If we are gonna break down below 40.65, these are going to be important. We're definitely going to be looking to use those as support or targets for profits. So we'll see where that goes. And then towards the top, you have your highs and lows of the last two trading days. We did gap through this area not so long ago, back in May. We did gap down right through here. So we don't have a lot of levels as we do here. And you can see here as well on the daily. But you do have this one spike here on this gap down day. This is going to be 42. It's a whole dollar number, which makes perfect sense. Worth marking on there. Again, I don't know how big that level is going to be. So don't put too much weight on it. Rather just use it as a minor area of support and resistance for now. Not a whole lot of weight on that. All right, that's good for Twitter. Great volume going into 2 million shares traded. So that's looking pretty nice. Now we have AMC. AMC, big down day yesterday, gap down huge. Did traded okay in the morning, had a nice rally, then kind of sold back down below their previous day close. This morning, we are getting a bit of a pop, up 4%. And again, guys, just be honest with yourself. If you're new and you're not as experienced, this is one you might want to try to avoid. Low of the pre-market is all the way down at 10, but I am going to mark down this at 10.56 because we are seeing some good action this morning when the volume came in, or at least started trading a little bit better, right? Instead of this one candle opens up here at 4 a.m., drops down, and comes back up. You still want to have it there. That's okay. Hold dollar number, no problem. But here is what you really want to have as your area support this morning. It's 10.56, and you also have your previous day close in there as well. Great stock for a scalping opportunity. So if you have scalping strategies, this can be a good one. Just know, don't be hard headed with this one. Don't force something because it will make you pay. 11.53, another great level here off the daily. Daily gets a little bit messy. 13 is the high and low of the last two trading days. You can see that right on there. I think that's all you might need here. If we get memeing here this morning, we can do at 12:48. I see. Again, this is messy, right? So I'm fishing for this level a little bit here. This 12:48. This is a really messy daily. But if we draw a line here, you can see that there are many days hitting that area. And what I like is this break on this day here, starting off that level. So that kind of spotted this a little bit. And if you draw the line, you can see there are many days opening, closing right around that area. So we'll mark it down. Also, it looks like to be the midpoint between this 11.53, which is a major support, and this 13, which is a major resistance. So could be a good one. Let's keep it on there. That could be a nice one if we can get going today. All right, that's it there for AMC. Let's take a look at Apple. Apple this morning getting a nice little drop in the last 2 days there. So right now we're going from red to green on Apple. Is the SPY dropping? I haven't looked at that in a second. What do we have going on with the SPY? All right, there we go. Yeah, SPY is going from red to green now. So Apple is going to follow suit, which it tends to do that. Didn't sell off as great yesterday though. SPY had a nice sell off, and I didn't see Apple sell off as clean. It did sell off, just not as clean. Here's Apple, guys. Low of the pre-market is down at 167. We created that a few minutes ago on a possibly some block trades here, but that's your low right now. We're testing that again just a minute ago. And if we look at our daily, again, we have some really good levels. This is clean right here. It's 163.30. You can't miss that resistance and support right on there on Apple. And then below that, we do have another level here at 160. Might be 160, 159.70 again. We won't be picky, but 160 there, it's good. And then all the way down here at 157. So plenty of levels on Apple this morning. Again, 157 will be a stretch. Something really has to go wrong today for us to get there. But 163 would not shock me. 163.30, if we are going to be weak, this would not be far-fetched. Right now, sitting at 167 for the moment. Towards the top, I'm going to mark down the high of the pre-market. And then above that, we do have our highs and lows for the last 2 trading days, doing a pretty decent job there. Take a look at Oxy. Again, great day. This would have been Friday. Great day on Friday. Even yesterday, they did drop down and they had a nice little rally with some volume as well. This morning, I think some of the levels that we have might actually still be good. 70.92 was the high probably from yesterday. We have 93. Yeah, let's remove them. Let's get some fresh ones. Yeah, so we got highs and lows kind of overlapping some of the stuff we had yesterday. Our pre-market low is 69.25, which is slightly above the previous day close on there. So be on the lookout for that as well. And if we zoom out, I think we're surrounded pretty good by the highs and lows of the last 2 trading days and the previous day close. We're right smack in the middle of our highs and lows for the last 2 trading days. So I don't think you need to add anything, guys. Just keep in mind the high and low in the previous day close are big areas of support and resistance, right? This 70, what we're looking at, 70.41, and also this previous day close and the low for today, sitting at 69.26. You can see the action we had here before. So we're kind of in the middle of that right now, a little bit towards the top of this range. Let's see if we can get another breakout. We had a great breakout on Friday. Let's see if we can do another one of those today. Great volume the last couple of days. Let's see if that's going to continue. So that's our list for today. Let's take a look at secondary stuff. INTC, I mean, it's movement. This moving, great price action. Tough to trade. We'll have to see where it goes. Macy's, great volume. This could be this is my top possible Macy's today because they can trade very well. They got the volume right now, so we'll see if this is going to trend one way or the other. This morning, Becky still not looking great, so I'm going to remove it. Still is not getting the volume. Might get it after the open, but at that point we'll look for our scanners. DIX here is starting to heat up a little bit, man. It's going back to high of the day at 114.64. This could be interesting. I like the daily on it right now, hitting that area of resistance. I'm going to go ahead and go to the left and see what we have towards the top. Yeah, this area here, we struggle to get above that on DIX here. Every time we hit that, you can see here we're struggling. Messy daily here, but if you draw a line there, you can see that area of resistance there. And towards the top of that, you got a couple of days kind of slapping 1911. It's just kind of getting above that. Well, not getting above that, trying to get above that, slamming into that. It's not able to, then it comes right back down to this 114. So we'll see where it goes. I like the daily right now. Volume is not great, but DIX tends not to have great volume pre-market because they are a NYSE stock, and as you guys know, these NYSE tickers, they don't get this heavy pre-market volume, but they can trade very well. So that's what we have. I think I'm gonna actually. I think DIX can move up here. I think that's could be the sleeper for today, man. It's starting to look pretty nice, especially if we could stay towards the top here, hitting that high of the pre-market. That's what we want to see. We don't want it coming back down here to this messy area, previous day close, highs and lows. We don't want that. We want this thing, just slamming against that 114 and being able to break out of that. That is what we want to see. One too many this morning. Let's see what we can drop off here. I want to keep just 6 on my list. Might be AMC or Oxy, either AMC or Oxy. But you know what? AMC is probably one that, although it's going to be in play, I'm probably not going to want to trade. It's just, I don't know. Today I don't feel like taking that type of risk. So yeah, but let's put AMC down. Let's watch XPEF, Zoom, Twitter, Apple, Oxy, and DIX, and then we have some other on here that we can take a look at. All right, guys, we are all set. Let's take a look at what our moderators are looking at this morning, 9/11, as we get ready to fire up our um, trading. I'm going to go ahead and just resize this over here so we can look at our moderators lineup. As we're doing that, let's make sure we hit that thumbs up over on YouTube. We're sitting at 156 likes, which is typical for 9/11, 10 time frame, 9 o'clock. But if we can help us get to 250, that we really appreciate it. It does help out the channel a ton. 250 is kind of like our threshold. All right, let's get to it. Let's get this list over here, disable this video, and we will get rocking and rolling. Anything else that looks good, guys? Anything else that we might be heating up that maybe I have not looked at yet? That's got some volume, got some movement, maybe gapping up quite a bit or down. Let's bring this over here. Let's see. We got Mike, we got Eamon, we got Susan, we got Megan. We'll wait for our main man Brian to send his list and take us through the open this morning. Here we go. All right, excellent. All right, 207. That was real nice. 50 likes just like that. Appreciate that, guys. We still got 420 people watching. If they have not walked away, if you could help us, if you haven't done so, appreciate it. All right, here's our list. Let's start with Mike. Mike is watching NVIDIA and Oxy. AIM and potential longs today. Bank of America, potential shorts, PFE. Susan is going to be watching Oxy, Zoom, Dix, and Apple. And Megan is going to be looking at JD and also Microsoft this morning. So that is the list so far. We'll keep it on here until we get more moderators throwing out their list, and then we'll hand it over to Brian and Andrew for live trading today. CFC, thank you for the support every day, man. Appreciate you guys. You are always on, so appreciate that over on YouTube. Thank you for that. HSDT says Nick. Nick, let's take a look at what that is. I don't think HDST, what is this? Headstrong Group? No, I don't know. What is this? Is this what you meant? Let me look at it again. Oh, no, you didn't mean this. Out of all tickers. No. There's nothing headstrong about this ticker. HSDT. HSDT. Okay. All right. Well, that looks better than what I just saw. But this one here is a penny stock that's starting to heat up here. If you're a penny stock trader, this is probably definitely in your list today. We don't really trade penny stocks. Again, we don't really focus on them. Our strategies don't work well on these things. It's a whole different animal. There's nothing wrong. People hear penny stock and they kind of get scared and want to, jump out the window. Penny stock. It's not that bad. It's just you have to have a strategy for it, right? There's nothing that's horrible. There's some stocks that I will never touch that someone has a strategy for and they can trade very well. Like I know people that trade KO on a regular basis and do very well. I will never touch this stock. It just doesn't fit our criteria as day traders. So when you hear Norman and I say, "Oh, this is horrible garbage," we're talking about trying to fit it into our scope of the way we trade, right? But if you look at this one here as what is HSDT? Without knowing much about penny stocks, this looks good. 9 million shares traded, up 30% from 54 to 72. That's a good move. Depending on how penny stocks work, which I have no idea of. So that's one reason why we're not watching it on our list. Carlos, all the levels that you're marking, is there any hockey for that? If so, please share. There is. So I have the hockey set up. Dash Trader Pro, by the way, and we're out of time, has tons of hockey's options. I do have it set up right next to, and somebody told me the name of this and I forgot this key. Left of my number 1 at the top of my keyboard. Somebody gave me the name and I forgot. I have that as my hotkey. So if I click that, it will automatically put this line on there. You can set that up, the tilde key. Thank you, guys. And then I have shift tilde, and that's going to remove everything. So I can quickly remove stuff and add levels very quickly by doing that, right? And it's shift is right on there. So it's very easy to do. So if you go through the hotkeys on that, guys, maybe we'll make a YouTube video or something. There's so many stuff you could do. It's unbelievable. Like this border here. You see this border on Oxy? There's a hotkey that you can bring all of them back. Or you can hide them all. It's a hotkey for everything on Dash Trader Pro, which makes it exciting. Key thing is keep it simple, guys. Don't overcomplicate it, but because you really can if you want to. All right, here's Brian's list, guys. Zoom, GCT, XBEV, Dix, and Apron. Blue Apron this morning. Peter will be looking at AMD, Apple, Oxy. Secondary list, Twitter, AMC, and to be determined. So he'll be adding some more there if any pop up. And for IPOs today, STBX, which again, these IPOs, guys, they're just wild. I remember IPOs opening up and just getting this crazy volume just for no reason. So we'll see what STBX does today. Guys, thank you so much for the 252 likes over on YouTube. Appreciate you guys. We are going to YouTube videos for hotkeys would be awesome. Yeah, we'll get something going. I think we have some, but we can do something. Thank you so much, guys, over on YouTube. We're going to continue here in chat. Brian will be on in a second here. We'll say good morning to him. We'll hand it off to him, and he'll take you guys through the market open this morning with Andrew. So, yeah, I think we're set, guys. Pretty decent list right now. Just to recap, while Brian gets his shirt on and gets rocking and rolling, we have XPEV, Zoom, Twitter, Apple, Oxy, and Dix today. And I saw someone had Microsoft. Who was that? Megan. Let's see what Microsoft is doing today. Not doing a whole lot today, but I see what she's watching it. It's gonna follow whatever the SPY does. And it's sitting at a good area of support and resistance across the board. And I think Megan looks as we wait here. Megan looks at the weekly, right? I think she does level off the weekly, if I remember that correctly from her amazing video over on YouTube. If you haven't looked at it, look it up, how to do support and resistance levels. It is sitting on our essentials playlist. So a really great video. She shows you how to find these levels. Oh yeah. Yeah. Look at that. 260, 276. Great level on the weekly. A lot going on there. So yes, that's looking nice on Microsoft today. Excellent. Megan says, "You know it, baby." Yep. So we know what you're looking at. That looks very good. Good, guys. We are set. AMC about to go crazy here. Yeah. It's live. It's definitely live today. It's a hot one, and it will be for some time, I think, here. And look at the volume the last couple of days. It's very high here. Good morning, Brian. How are you doing today? All right, there you go. I got you. Volume. I'm like, good morning. All right, guys, I'm gonna hop off on YouTube. Thank you so much. The 270. Appreciate you guys. I will see you again tomorrow. Today we have closing bell at 3:30. Do not forget. See me in chat there, and we also have our strategy tonight. And tonight is Andrew, guys. Do not forget. Tonight is Andrew, and he's gonna be doing our strategy webinar in the webinar room at 8 p.m. I'll see you in the chat there as well. So we got a fun packed day today. Brian, take it away. I'll see you in a bit.